Everybody, welcome back to the channel. My name is NGumah, founder of PATTERNOLOGY LAB. This video is the third episode of how to trade patterns. All right. In today's video, we'll be going over one of my trades this week and how it was 100% predictable once again, and most importantly, why it was 100% predictable. So stay tuned. Now, before we begin, if you're new to this channel, definitely hit that subscribe button below and also hit that notification bell. That way you get notified when I release new videos. And it also allows YouTube to show these videos to more people so that they can get this knowledge as well. The trade that I took this week was on JP Morgan. Now let's dive into Thinkorswim and see exactly how I approached it. This right here is JP Morgan. This right here is on Wednesday, and this is on Thursday. Now, the reason why I chose to take this trade is because it looked really familiar to me on the 5-minute chart, but it wasn't very clear. So what I did was to take a good look at it and reduce the time frame from a 5-minute time frame to a 1-minute time frame, just like this. All right, so I changed the time frame to this, and then if we take our drawing tool, right, and we select this one, we can clearly see that something interesting is happening here. And if you've been subscribing to my channel, you can see that this structure right there is called an ascending triangle. Now, the reference that I use to make this trade, to like compare the charts and make sure I get in at the exact time that I should be getting in, is actually posted on PATTERNOLOGY LAB's Instagram page. Now, let's take a look at our Instagram page. This right here is the Instagram page, and if we just scroll down, we can go to this one. This right here is the chart that I use. This is the trade that I took on Cisco on March 16th. And as I always tell you guys, again, I post the patterns that I spot daily, and I post my entries, right, along with the exit and the ROI for that specific trade. And also I do post the reference that I use to make the trade. Okay, now the way I approached this trade was by buying calls on JP Morgan. Now let's go over here on Thinkorswim and let's look at the monitor tab, right? And if you look over here, we can see that I bought one call that expires next week, Friday, right, at the strike price of 107 for exactly $222 at 11:03:39. Now let's go back to the chart and let's zoom in here. Now 11:03:39 was right in this candle right there. And one thing that I want you to notice is this. You see the volume at the bottom? I got in along with all of these people, right? And the goal was very simple. And the goal was to pretty much follow the chart, okay? Just pretty much follow the graph, all right? And then get out of the trade when you're supposed to get out. Now, the price target that I have for JP Morgan was between $103.50 and $104. And I chose that price range for very specific reasons. Now, let's go back on here and let's look at it on a daily chart, the daily time frame, all right? And if we look very closely, we can see that a month ago in this very candle, there was a bunch of buyers all the way up here, right? And I anticipated that there was a lot of FOMO traders, right, who got in at the very top. And as soon as the price of JP Morgan on Thursday got close to that price target, I would assume that they will all sell and bring the stock down. Okay. Now, again, evidently, if we look at what happened on Thursday, right, on Thursday, as it started creeping up and got to that 104 range, right, it just dumped as anticipated. If we look at the monitor tab, you can see that I got out of that trade at exactly 11:21:20 for $292, which is about 32% of my money, which is not bad. Okay, now I'm pretty sure some of you are asking, why didn't I sell at exactly 104 right before the pullback, right? And the reason is this. I'm gonna show y'all the graph of that specific contract. That way you can see the reason why it didn't make any sense. Now, if you go on the trade tab, right, and you scroll down to the option that I took, which is the 107 contract, and you do right click and you do copy, and you go back to the charts, and then you just choose something else, like choose this red one, right? And then you just paste it in there. And this is the chart of that option contract that I bought. Again, the entry was at 103, right, for 220 right here. And then the exit was up here at 290. Okay, now one thing that I want y'all to know is the difference between the price here, right, when I get out, and the reward after waiting for an extra hour. As you can see, it's really not that significant. And to me, if I can get out right here and make the majority of my money and look for another opportunity to trade that will probably give me an even bigger percentage, then that makes sense for me to get out early instead of waiting for the exact top to get out. Ladies and gentlemen, that is the end of the video. Again, if you have any questions at all, don't be shy. Definitely put it in the comment section below. I will get back to you as soon as I can, or I will just make another video about it and explain it thoroughly for you and for everybody else who is watching. Also, if you're new to this channel, definitely follow us on Instagram. I do post the patterns that I spot daily, and I do post my entries and my exits on there as well. My name is Paul with Patternology Lab, where we trade patterns and patterns only. And I will see y'all on the next one. Take care.